All, welcome back to the channel. Today we'll discuss on the trial balance. So we are running the private equity interview question. This is a 17th session on which we discuss about the trial balance. So how its impact, how it's better for the private equity. We'll go with one by one step. So imagine running $1 million private equity fund, but one teeny accounting error throw everything out. So how the firm catch up this mistake, and how the trial balance should be get accurate, and today we are breaking it all down into the private equity, how trial balance is important. Welcome back to the channel. We are in the private equity finance. Just love understanding how big money stay in check, and hit the subscribe button for more info, because today we are talking about the trial balance and why it's game changer for the PE fund as well. So first of all, what is trial balance? Trial balance is like a financial checkpoint. It lists all the account balance at a specific point in time to ensure that can be book our balance in simple terms. So debit must be equal to credit. If they don't, then there is some error between that. Is that impacting our statement? Why it's matter? Okay, so we'll discuss this. Accurate income statement and balance sheet, no hidden error that could mess up valuation, smoother audit, and investor confidence. So trial balance helps to balance out all these three important part. Is there accounting exception? Yes, there is some accounting exception as well. So here where it get tricky, trial balance should always match, but if does not match, then firm need to make adjustment. This adjustment can be delay financial reporting, even impact investment decision, investor decision making also. There is some example. Yes, there is some example as well. So want to know the real world case? The Carles Group is a one PE giant perform detailed trial balance every month. Why? Because they have investment structure are very complex. They invest into multiple sector, so that's why they are following trial balance. Even the small miscalculation could lead to millions in error for the big PE firm like Carles. This is how the trial balance works. Now we know about the theory part of the trial balance, and understood about all the thing, accounting exception and the income statement, how is believed, and we see the example. So now it is time to see the example on the basis of the trial balance. So this is the example of a trial balance. After posting all the general entry, PE fund will prepare trial balance to ensure the total of a debit equal to the total of a credit, avoiding the accounting error. So capital contribution is 5 lakh dollar. Investment in portfolios they have 3 lakh. Management free expenses are in $20,000. Cash is 3,20,000. Revenue is 50,000, and salary distributed 50,000. But here we can see the total of a debit and credit is not balanced. This means there is some mistake or not recorded into the trial balance as well, because trial balance is first uh, step towards preparing the financial statement. Trial balance, then we have a trading profit and loss, and then it goes to balance sheet, and then income statement, and whatever the thing you can prepare for the financial statement as per your fund requirement. If this trial balance is not perfect, then rest of the statement will be always wrong. So most of the PE fund focus on the trial balance should be equal to the debit and credit side, and if they not found it, they make adjustment for some time, but they have to scrutiny about how something is missing or not. So this is how for the trial balance in the private equity part. If you know, if you want to know many more thing, you can just comment on the section. We'll get back to you with a comment again. So thank you so much for watching. We'll meet you on the next part.